Edition of the Startup Central with an ET Now exclusive. We were the first ones to tell you how Grofers was back on the M&A menu for Zomato, and today we're going to be reporting how the IPO-bound Zomato is looking at more strategic plays. So it's done e-grocery with Grofers in a $100 million deal. Another story that we brought to you just 24 hours ago. The next strategic play that Zomato seems to be looking at seems to be in the intra-city logistics sector. We understand from our sources that Zomato and VFast parent company have held initial exploratory talks. These talks are at a very early stage. They may not even fructify into a transaction or any possible deal, strategic or financial. Nevertheless, our sources have told us that talks have begun between Zomato and VFast parent company that goes by the name of Dosta Vista. If you look at VFast, it's of course been one of the biggest beneficiaries of COVID-19. In fact, the company says its year-to-year intracity deliveries have increased 7 to 8x. It seems to be a natural fit of sorts for Zomato just by the fact that it's a logistic intracity player. Now, Zomato's core business is, of course, food and delivering restaurant foods. And in that sense, having a logistics player strong in the intracity logistics would seem like a good fit. We, of course, reached out to all concerned parties for their comment. Zomato said it will not be making a comment and has nothing to say at this stage. VFast told ET Now that talks on for investments. VFast is part of a global brand, Dosta Vista, and yes, while there are some conversations going on around investments for our global brand, there was no separate conversation for VFast with Zomato in India, unquote. That's the full comment that we have got from VFast. Now, Zomato, of course, has an international business as well. So it's going to be interesting to see if the parent company of VFast and Zomato actually figure out a strategic deal which will be global in nature. But as you can see, Zomato declining to comment, and I've just read out verbatim for you the comment that we got from VFast. Zomato, before the IPO, is clearly looking to expand from the non-food category. In recent months, it, for example, entered nutrition and supplements. It had entered grocery last year, that didn't kick off, and now it is doing a $100 million deal with Grofers. We are being told for that deal will be going before the competition watchdog, the CCI, in a matter of few days. And now it seems intracity logistics is also seeming to be an important play as far as Zomato goes. With VFast, not only can it use VFast for delivery of food at restaurants or from restaurants, but for what VFast is also used for, delivering essentials, be it like medicines, all kind of other kind of parcels, paperwork. So it seems as if Zomato is keen to expand from the non-food category, something which has anyway been demonstrated with the Grofers example. So that's the big story that we're breaking for you on today's edition of Startup Central. Zomato going in for a $1.1 billion blockbuster IPO, the first Indian unicorn headed to the Lal Street, and before that, clearly looking to flex its muscles and expand its portfolio. Now, you can call this a coincidence, but before we got working on the story and confirmation on the story of sorts, we had fixed up Bernstein's India director, Rahul Mathur, to talk to us about the e-grocery market. Bernstein had come out with a report as recently as 22nd of June, if I'm not mistaken. So we wanted to understand what's going on in the e-grocery space. If you look at the last couple of months, you've had Tatas, which have paid top dollar, $1.2 billion for Big Basket, and now you've got Zomato looking to give a $100 million check to Grofers. E-grocery is clearly very hot, so we thought let's get Rahul on the show today. Rahul, it's a coincidence of sorts. Thanks so much for joining us. I'll begin my interview with you with the story we've just broken, how there are initial talks that have taken place between Zomato and VFast. All of this happening soon after the Zomato-Grofers deal. What do you make of this, Zomato looking to clearly enter non-food categories?
Thanks, Nayantara, for having me. I think it's interesting because, as these platforms expand, they're looking for a larger TAM or addressable market, and they'll focus on diversifying their revenue base. Again, food deliveries now become a duopoly, and market growth continue to happen. But I think we've seen some saturation in the tier 1 cities. So the growth now is going to happen from tier 2, tier 3 cities. And I think the idea of expanding the TAM into new markets is clear from an expansion perspective. So they're looking at e-grocery. E-grocery is a fairly attractive category. India is still less than 1% penetrated from an online grocery perspective. We expect that to get to 5% next 5 years, 3 to 5%. And that gives a large opportunity for food delivery companies or other companies to look at grocery. And I think it's also synergistic because, the same food delivery person can kind of, the network can be used much better if you have multiple categories, food, grocery, and other categories as well, which is potentially a subscription or a hyper-local model, as we have seen in other countries. Meituan in China has done very well, where, they have really scaled up to a level where non-food is 40-45% of their revenue. So I think it's a similar playbook that will be played out where most of these companies will diversify their revenues and food will remain a big part of that mix, but it'll start coming down as they diversify into various other categories like grocery, medicines, other categories. And I think that's where the apparel as well. So that's where I think the focus is to keep on diversifying the business models.
Absolutely. In fact, I was reading the report that you had authored recently, last week, in fact, where you said that the e-grocery market can be as large as $21 billion in about 4 years from now. You yourself saying the penetration is about 1% at the moment. But Rahul, if you just look at the players, they're all cash rich. They're all the biggest of the big. You've got Amazon on one side. You've got Reliance Jio on the other side. And, Zomato is also clearly entering e-grocery. So, this is not, I would imagine, a winner-take-all market at all.
No, absolutely. I think there'll be different models of e-grocery. I think there's clearly two models that we are seeing right now. One is the instant delivery model, which is 1 hour delivery, and largely focused on the tier 1 cities, metro cities, where you expect delivery in 3 to 5 hours for a smaller basket of grocery options. And I think that's where the food delivery players who have experience of doing delivery in 30-40 minutes are really well positioned because they know the hyperlocal model. They can deliver in households in Delhi Metro or in Mumbai or in Bangalore fairly quickly. I think the other grocery model is the value customer grocery model, which is a price conscious customer looking for considerable discounts, and they're open to getting delivery in 1 or 2 days. And I think that's where some of the larger players, JioMart and Big Basket, probably will play a much bigger role. I think the more convenience focused customer who wants a delivery in 35 to 40 minutes, less than an hour, will probably look at hyperlocal players like Swiggy, Zomato, and then expect that to have a quick delivery. And these are convenience focused, quick on time, don't have hours to spend on an app to figure out where the best discounts are. So I think two different models getting built up, and I think there is an advantage definitely for the hyperlocal players on the more convenience, quick delivery model. So I think while the market is large, it's also competitive. But I think every player is trying to build their own business model that fits in that entire e-grocery option.
But then if this market is so large, Rahul, can you explain to us a little bit on why we're seeing the kind of consolidation that we're seeing? From everything you're telling me, and like I said, your report also alluding to that, India has not even scratched the surface yet when it comes to e-grocery, and yet look at Tata, the kind of money they're willing to shell out for a big basket, the fact that Zomato is willing to write $100 million check for Grofers.
I think, Nandar, I think the economics of the category have to be looked at, right? I mean, the economics of the category, it's a low margin business. So you need to reach a very significant scale to start making profits. And I think that's where consolidation always plays in categories which tends to be low margin. Your unit economics in grocery are still getting built up. I think the take rates are still low. We understand it's like 7 to 10% take rates. The gross margins are 20-25%. So effectively on a 1P model. So these are low margin businesses and such where you will see consolidation because the more smaller players would want to consolidate and scale up because scale is what is the differentiator. Scale is going to bring margin. Scale is going to bring more growth. And I think you cannot have 10 players in this industry. I mean, even it's $21 billion, we'll end up in 3-4 large players to really play out. And I think that's where some of the smaller players will start to see partnerships build up with other players who are in adjacent categories. So Grofers and Zomatos look very interesting because Zomato is obviously market leader on the food delivery side, and then Grofers come from an e-grocery perspective, and they create an opportunity which is they expand the TAM. but also improve unit economics, because the same delivery partner who is just doing food delivery and probably doing 8 to 10 orders a day can expand that to also doing grocery delivery, and then probably potentially do 15 plus orders a day. And that is helping unit economics to go down. And I think that's a core reason. Scale will obviously make it more profitable. So you will see this consolidation play out, where the smaller players will look at larger partners who can help them improve economics and get to profitability faster. So I think that's a natural. And I think food delivery and grocery delivery is synergistic because you're using the same network of delivery partners for doing both. So more categories coming in helps them to scale up faster. And we've seen that in the case of Swiggy, the large round they've raised through SoftBank was largely to build super daily and grocery delivery. So I think all of them are trying to focus on this category, and I think it's natural that either Zomato will build on its own or look for a partner to scale that business up, which has happened now.
But then, while we're talking about unit economics, I want to play devil's advocate here and ask you a different kind of a question. Now, whether you talk about an Amazon, or you talk about a Jio, or you talk about even Big Basket and its future plans, and what Zomato, Swiggy Genie, all of them are planning to do, which is to onboard the original kingpin of Indian retail, the Kirana and the grocery store. That Kirana owner now suddenly has everyone chasing him for his business and to be onboarded on a platform. It's very unlikely that a Kirana is going to be signing exclusive deals with any of these players. Isn't that going to be impacting unit economics?
So I think the Kirana angle obviously is something where the model which will develop, and I think we're still early stage to figure out eventually what model really is successful. There is different value proposition across the board. The B2B players or larger players like JioMart or Amazon or other players are really focused on an end-to-end positioning, where they're not only helping the Kirana stores aggregate demand. That means there's a lot of leakage happens in India's supply chain. Right? It's 12 to 15% leakage. So they come from a very B2B perspective as well, where their ability to consolidate demand, reduce the cost structure for Kirana stores, and aggregate that and help them improve margin profile. So that's one value proposition that potential larger players, you talked about JioMart, Big Basket, Amazon can come with. And then there is this other value proposition of quick instant delivery, incremental customers, in metro cities, in buildings where they want 25, 30 minutes delivery, which is then catered by the demand that's coming from a typical user of Zomato and a Swiggy. So I would say that, there are various models getting built up. There is the B2B model, which is obviously a larger opportunity, which is where I think the bigger players have a really deep value proposition. And then there is this B2C instant quick delivery model, where I think the food aggregators definitely have a play to make, because they have the hyperlocal, they have close to 160, 170,000 overall in the industry, 300,000 delivery partners. So I think everybody will figure out the right segment of the market. While the market is large, I don't think everybody will overlap. So the Kirana stores will get serviced by the JioMarts and Big Baskets and others on a B2B perspective. And I think also from Swiggy's and Zomato on the B2C side. So India has 15 million Kirana stores and just 20% are digitized. The opportunity is significantly large. I would say, various business models will develop around that. And I think that's what we're going to see over the next few years.
Absolutely. It's like as if the Kirana is becoming the kingmaker again. Usually you hear about stories about how they're going to be, at loss, but they're actually going to be playing kingmaker if you go and do a deep dive. Now, something else I want to ask you, Rahul, and that is that, if you were just to look at the Western model, typically, it's been a Me Too of sorts when it comes to India's e-commerce story. So when it comes to the subscription model or the private label model, you touched upon it very briefly. Is this going to be a big play, you would imagine, whether, it's for Tata Big Basket or for an Amazon or a Jio or now even Grofers and Zomato?
No, I think private labels definitely have a big role to play. I think considering the understanding of customer behavior, all of these platforms have, with millions of customers buying and purchasing and showing what kind of things they are buying, there's obviously potential to identify certain brands where private labels can work very well. And I think the eventual idea is also that, as we talked about the lower margin profile of the category, private label enhances that margins in that category. So most businesses, I would assume, would focus on private labels getting to anywhere from 25, 30, 35% mix from an overall perspective. So I think it's very clear that private labels have a key role to play. There are already a lot of private label brands which have done well, whether you say look at Amazon or look at JioMart, a part of their grocery catalog. So I think that's a play that will continue to scale up. And I think it's important as well for the brands or for these platforms to figure out the right kind of private labels, because that's clearly margin enhancers. I mean, private labels are 25, 30% net margins, and then that's a fairly profitable value prop to incrementally add to your e-grocery margins overall business.
But Rahul, the way the Indian government is approaching e-commerce, you can look at the recently, policy measures being proposed, which is now for which they've invited public comments. The definition of the marketplace which exists at the moment, which has made it more difficult for the likes of Amazon and Cloudtail. Is it going to become easier? Is it going to be possible, rather, for these platforms, whether it's going to be the Tatas or even Zomato for that matter, to have private labels and to sell them in their marketplace?
So I think that's where there is need for more clarity, and I think everybody is running private labels even on a marketplace platform. And I think the idea of 1P versus 3P and FDI regulations not allowing private labels or a 1P model for global companies like Amazon and Flipkart, I think that's where I think we're trying to get a good sense on. I think it's clear that private labels are key for the success of these platforms because they allow these margins to expand significantly. But I think from a regulations perspective, there is more clarity required. Right now, every platform is running private labels, and that's all even for the global platforms which are not allowed to run a 1P model in India as per regulation. So I think it has to be watched and weighted out. And I think that's where the advantage is potentially for the domestic platforms, right? Tata's own Big Basket, they don't have any regulation challenges because they're an Indian business and they can run private labels. JioMart is an Indian business, they can run private labels. So potentially that's less for a worry for players who have Indian ownership, but for companies which are globally owned, have to go through FDI regulations. I think it's a concern, and they have to figure out the right kind of business model because they have challenges on, and with the regulations coming in on concentration of sellers on the platform, you can't have one seller selling more than 25% GMV and all of that. I think there's some room to, there has to be some more clarity coming in before I think that's cleared out on how to run private labels on those platforms.
You began this interview by also talking about how e-commerce, in a sense, or rather food aggregators, and a lot of the e-commerce business models at the moment have reached a saturation point in the tier 1, tier 2 cities. So where does e-grocery fit in that? Would you say that e-grocery has also hit a saturation point in tier 1, tier 2, or would you say that e-grocery is hot regardless of where you reside in India at the moment?
No, I think e-grocery is so underpenetrated. I mean, India's retail is $800 billion and grocery $600 billion. So we're talking about less than 1%, 0.5, 0.4% penetration today. So I don't see, the challenge on saturation or penetration is not there in any markets today. I think grocery is so early. And I think considering the different business models that are getting built up, I think in every city there's a large opportunity to scale up e-grocery. So I would say, the reason why e-grocery is growing 60-70% year on year is because it's an opportunity that's available across cities, metros, tier 1, tier 2 cities, and that's why it's such a I would say attractive opportunity for everyone to get in and try to get a market share in that segment.
And can you give us a sense of, right now you have so much global excessive liquidity. Is it chasing the e-grocery space in the country? Because there's always a fear of the regulation and, a protest and all of that. Or is it the other sectors, whether it's a SaaS or an EdTech, which are hot or hotter?
Well, I think e-grocery definitely is one of them. I think you've seen some of these sectors do very well during COVID because suddenly acceleration of adoption, right? We have seen EdTech numbers expand significantly. EdTech companies getting funded significantly over the last few years, Byju's and others. And we've seen, I think, similar profile for e-grocery as well. Because the market opportunity is so large and we're so early in the market, I would say that it's from an investor perspective, it remains a very, very attractive segment. Considering the growth opportunity here, considering India is so early in e-commerce, and it will become a large part of the e-commerce growth that's going to happen over the next few years. And I think that's where there's a lot of interest for investors, even in e-grocery and definitely in other categories, which are, as you talked about, SaaS and others.
Fintech. So Rahul, my final question to you. With Zomato just waiting for the final approval from the market regulator, we do understand it's in the last lap. How do you think investors at the stock markets will reward these recent moves of Zomato, including the $100 million check to grofers? We don't know if it's a precursor to an eventual buyout later, but is that what the markets would want?
I think there was, there's clear view from a market perspective that eventually business models have to be, end to end and fairly diversified. And it's always positive when players expand their total addressable market. As we discussed earlier, that the food delivery model in India is mature and there's clearly a lot of TAM left, but still expanding that TAM into groceries is a bigger opportunity. And there is synergies between doing food delivery, delivering in 35 minutes, and grocery delivery, which is fairly similar. So I would say that markets will look at in a positive way that the grocery being a large opportunity, it gives Zomato an option value. As you rightly said, it's an investment today. They can look at this going forward in a more transactional manner as well. And I think that's a bigger opportunity, and I think markets would reward it and look at it positively.
Rahul, it's always a pleasure talking to you. Thanks so much. And an invitation on live television. The day Zomato's DRHP is approved by the market regulator. I hope you'll be back on ET Now.
Great. Thanks, Nayantara. Thanks for having me.